Let's find out how things are trending when it comes to CEAT with respect to their overall earnings, what the outlook is on their guidance, their new launches, and demand trends. Arnab Banerjee is the MD and CEO at CEAT, now joining us on the show. Thank you for taking the time out. Let's discuss your numbers first up. And there was an obligation pertaining to EPR that seemed to have impacted the quarterly net profit this time around. Do you expect this expense to rise further in FY25? What is the outlook on your net profits?
Yeah, let me explain the EPR thing first in detail. So this is we have booked roughly 2 years of EPR liability, which is FY23 and FY24. FY23 has been a special item, and FY24 has been booked above the EBITDA line. So this is bunched for 2 years. Henceforth, it will be a regular item going forward prospectively, which would cost anywhere around 1.25, 1.3% of our domestic turnover.
You know, the very critical thing, Arnab, that we wanted to understand specifically was the fact that you've already seen an increase in your margins, and clearly raw material tailwinds have been at play over here. But tell me, how do you see raw material prices actually shaping up going forward? Are they stable now? And then should we expect sustainable margins going forward from you?
Yeah, as you have noticed in Q4, we have expanded the margin basis both slight decrease in raw material cost and slight increase in our sales realizations. Our outlook is that raw material will be mildly inflationary. We don't expect huge shocks in raw material, but it is in Q4 trending a little bit upward.
The challenge with any tire sector industry is the volatility in the margin and dependence on raw material. Is there a way to really hedge it for next 2 or 3 quarters? Because given how the global constructors, oil, or for that matter, rubber, these prices are literally all over the places.
It's not so actually. Over the last 4 quarters, it has been pretty stable. Rubber is, of course, going up. However, the demand situation in China is still not great. Europe is under recession. US is cooling off a little bit. So overall, globally, the demand situation is very mild. India, of course, is doing well. So we don't expect very violent movements in overall raw material basket. Yes, it is inflationary as of now. We see it going up in Q1 over Q4. So when it grows gradually, it is easier to manage.
50% of the total market mix is a function of replacement demand. How is that segment evolving, and at what rate you expect the replacement market to grow?
Replacement market, we are quite bullish on that overall because the rural and the small town segment is shaping up where most of our two-wheeler sales comes from. We have been able to increase market share in two-wheelers, so we are bullish on that segment. Passenger car tires have had a bull run in the OEM, so the replacement demand will show up in passenger car tire. Q1 is an election quarter and summer. So on both counts, we expect passenger demand to be high as well, in high single digits in terms of volume growth. The overall economy is doing well, so replacement demand for truck tires in summer months, again, it's a season for truck tires. So we expect this demand also to be somewhere around middle single digits. So I am quite positive about Q1, and over the year 2, the replacement demand should be good.
When you say positive, I'm assuming that you're talking about at least double-digit growth.
High single digit to double digit. I wouldn't say in all categories it will be double digit, but in two-wheeler, maybe it could be. In four-wheeler, it could be high single digit, and in truck bus radial, it could be somewhere middle single digits.
Right, now the company had also spoken about scaling up the export revenue contribution. There's launches planned in the US, Latin America as well. Can you give us a little more perspective in terms of what the opportunity looks like for exports and how much it'll contribute to the overall pie?
Yes, so we expect the saliency of export to improve by about 2 percentage point at least in the FY25. Our Europe market has done very well. Middle East has done very well. The US launch is coming up in Q2 of this financial year. So far, the product feedback is better than what we expected. We have thoroughly tested all the products in US for the last 2 to 3 years. The market access is being set up. Latin America has been doing well. We expect to have better market access in Brazil and some other markets of Latin America. We have enhanced our field force in both US and Latin America. So I think we are getting ready to launch and expand our footprint in these markets while growing strong in Europe and Middle East.
Okay. One comeback in the auto sector has been the comeback in the two-wheeler demand. You did mention that you expect the two-wheeler demand to sustain in the double digit. But can I say that from a tire manufacturer standpoint, this really is going to be the high point in terms of a sector where the contribution will significantly change? Do you see that kind of visibility coming from the OEMs also?
If I talked about replacement demand, you are talking about OEM demand, I suppose. So the second half of last year has been absolutely breathtaking for the OEMs. The point to note is that we have still not seen the OEMs breaking out of the pre-COVID numbers. So yes, there is headroom for growth in the OEMs, and we are quite bullish about our participation in the OEMs. Combined OEM and replacement, this sector could be in for a good growth in FY25 and beyond.
Very simple question, which is that if I look at the car and the auto industry, there is a huge upgradation, heavier trucks, better roads. Sedan is going down, SUVs are coming up, EVs are coming up. There is a lot of technological advancement which is happening within the auto industry. So for a car company, what does that mean?
For a tire company, you mean?
Sorry, for a tire company, I beg your pardon.
Yes. So we have been prepared for the EV revolution in India. So we have the right technology for preparing EV tires, which need better traction, much lower noise, and of course, much lower rolling resistance on the road. So we have been participating across OEMs in their EV programs, across all OEMs in India in their EV programs, in two-wheelers as well as in four-wheelers. So we will participate in the growth as it comes along right for the next 5-6 years. When you talk about SUVs, it is, you're right, people are driving longer distances much more frequently with their families on road and also off road. So our cross-drive tire, our sport drive tire, which has been done for this segment, exactly this segment of customers and these kind of vehicles which have higher rim sizes, are growing in saliency rapidly for our replacement sales as well as in OEM sales. So we are very much prepared and excited to participate in this journey. And we are going to take the brand there from the commuting from office to home to traveling longer distances, maybe overnight, off-road as well as on-road. The brand is going to shift there as well.
So I'm just drawing a context here for the benefit of our viewers, which is that when the EV cycle started, auto ancillary companies, they rebooted themselves. They moved into electric engine. They moved into different assembly lines. The entire environment in the ecosystem for Indian auto ancillary companies has changed. For a tire manufacturer, do you see that the environment changing, or these are incremental changes which may not really change the entire environment for a tire company?
No, the tire design is totally different. It looks like a round black tire, but it's totally different. The compounds that go in are totally different. So the engineering of the tire is totally different. It looks the same from the outside. The patterns are totally different. So we have been mastering this technology over the last 5 years. In the manufacturing process also, there is an impact. It's not that we have to set up new plants, but new equipments within the plants are required to be able to manufacture these tires productively in a mass production setup. So it has been, we have been seeing this change over the last 5 years. Therefore, we have been investing in this technology, both in manufacturing and design. So I think we are all set, not only for the Indian market, but even supplying EV tires outside India.
Right. Okay, great to have you on the show. Arnab, thanks so much for taking the time out and speaking with us today.
Thank you very much.
If you like this video, then like, share and subscribe to ET Now.